All right, thank you so much for joining the webinar today. I have Chalice and E2P here to talk to you about maximizing your enterprise value. We have Keith Gregg, who's the CEO and founder of Chalice Network, and he is going to give you some more information on how to reduce your costs, maximize your enterprise value, and how we've partnered with E2P, which he'll go ahead and introduce the team. So Keith, I'll turn it over to you.
Thank you, Whitney. And for those that don't know, Whitney is my partner, the Chief Marketing Officer for Chalice Network. And so we're delighted to have all of our members from the Chalice Network at this webinar today, and super excited to introduce our new partnership with the folks at Equity Enhancement Partners. For those of you that have been tuned in for us for a while now, or members of the Chalice Network know, we are firmly committed to helping the small to mid-sized businesses gain the economy of scale, operational efficiencies, and enhance enterprise value. That's kind of been the Chalice promise since we launched the company. And we do that by adding value, the likes of the benefits which you're about to hear today. So we're super excited and honored to be partnered with Equity Enhancement Partners, E2P. And we couldn't be more thrilled that they've chosen to have Chalice be their partner, provide the platform, the benefits and savings that we're delighted to pass along to all the members of the E2P family. With that, I'd like to introduce the founder and CEO of E2P, Ron Robertson. I have been blessed to know Ron for about 15 years now. This is a seasoned professional. The beautiful thing about what you're about to hear is somebody that's been there and done that versus those that tell you about what to do and never done it. So with that, I'm going to turn it over to Ron. And Ron, share with these folks what you guys in store for them here at E2P.
Thanks, Keith. Welcome, everybody. Hopefully you're having a great day. We're going to blast right through this. From the outset, just want to say our goal is to help you guys be as successful as possible and, realize as much value from your life's work as possible. And we have a pretty unique strategy for accomplishing that. We have a seasoned management team. Our guys have collectively created over $1 billion of enterprise value. We have broad industry experience. Every single one of us have been there, done that, have had very successful exits. And we want to bring that expertise to you. Typically in the industry, aggregators, they're looking to really buy up smaller books of business and then institutionalize them, buy them at maybe a 20 to 50% premium, but their goal is to put them into institutional models, aggregate over $1 billion of assets. And that $1 billion is really a magic number. That's where you really see a step up in valuation on books of business. And what they do is they buy all these small books of business, $20, $50 million guys, put them together, put them into a common portfolio system, and then they sell them off and they pocket about a 300% profit. It's a great business. We have a little different approach to maximizing the value of the assets. And we're going to walk you through that right now. Our program takes the single advisor and we try to give you the scale and appearance of being a big shop. We want to give you the economic advantages, the advantages of being able to go out and pitch a $5 million account, have success, have confidence, know how to price it. And then at the same time, moving your book so that it's as valuable to a buyer as possible. How do we create value for you at your exit? We institutionalize your book into custom portfolios. We have a number of model portfolios that our PMs will talk to you about shortly. We systematize your process of pitching. We have a training program. We create a custom pitch book for you that really helps you look big, and it gives you, our CIOs are embedded in the presentation. The pitch book is crafted so that it integrates the portfolios that we're using with the management theory. And we really find that this process really gives your clients and prospects and CPAs the confidence to make referrals to you. Just a side note, I came from the estate planning side of the business with zero asset management experience. And I had a great mentor, Duncan Smith. And I knew nothing about asset management. He sat down and he told me, he goes, Ron, I want you to take these materials. And he told me what to say on every slide. I went out, and long story short, in 9 months, I moved $100 million. And in 8 years, I moved 800 million. So the process works. I know what I'm doing. When I say I can help you, trust me, I can help you. When you're sitting around and you're thinking, okay, I'm 60, I want to exit. How do I get the maximum amount of value from my book of business? And that's what we're really about. I want every one of you guys to get as much money for your book as possible, and we know how to do that. The way we do this is we take whatever it is, 30, 40 smaller advisors in that under $100 million range. We aggregate you together, and we put you into common portfolios, common system. We put you into a common communication system, and we package you up so that when we take you to the street, you look like $1 billion plus of assets, that it's a homogeneous set of portfolios. It's nicely organized, and we bundle you up. And assuming a 1% management fee on $1 billion, it's $10 million of revenue. That's a value of somewhere between 40 and $50 million. And so what we do is we take a 10% fee, success fee, for aggregating you together, and then we give you the upside. We take that 40, $50 million, we divide it up proportionally to your revenue that's contributing to the value. And it ultimately takes you to a point where the value of your business goes from theoretically, whatever it is, 1.4, 1.5 times revenue to something on a magnitude of 4, and you walk away with a much bigger exit. Yeah, go ahead. So our slogan is we give you the up. Rather than putting the money in our pocket, we give it to you. In our system, there's no initiation fees. You retain control of your book. You retain control of your clients. Your assets remain at the same custodian. All we need is trading authority on your book. At any time, you have the option to quit, leave. When we put everybody together and we get ready to exit, you have a 30-day window to say yes or no, I'm going to participate in the exit. Some of you may decide, hey, I'm going to work a few more years, but the control is really left in your hands. This illustration depicts $50 million advisor. Theoretically, the value is somewhere around 1.5. It's the typical book, $50 million book, has 600 different investments in it, and isn't modelized, which is not attractive to an institutional buyer. And at the end of the day, our process hopefully will give you a 300% pickup in value. The one thing that is really critical that kind of integrates with our program is we really want to train you. If you're nearing the end of your career, you're probably spending too much time on the golf course. And one thing that really hurts your value is if the buyer sees the declining trend line in your client acquisition and AUM. And we really want to boost that last 12 to 24 months, 36 months of your activity. We want to really equip you, get you positioned to, harvest more referrals and move you upstream, get you to the point where your minimum is 2.5 million, There's no reason why you can't grow your book by 50% in 24 months. I'm a great coach. I know how to do this, and I will make sure you grow your book. And the thing to remember is if you add $10 million of assets to your book, you're putting another $400,000 of value in your pocket. And so the growth component of what we're doing is really important. Our key leaders are Ken Knight and Lane Sapp. Ken went to a community college in Connecticut, Yale University. He graduated #1 in his class in engineering, taught at University of Texas, Stanford, has his PhD in economics, critical component of our team. Lane Sapp bootstrapped a company, took him 25 years and generated about $900 million of value. We went out, it's one thing to have a great strategy. We're going to aggregate guys together, create value. But at the end of the day, we need to create the best investor experience for your clients. And so I've had the luxury of knowing Erik, Ogard, and Thane Cleveland for 25 years. Totally respect both of them. Erik he was the youngest portfolio manager in the history of the Frank Russell Company. He ran their small cap mutual fund. Ultimately, he ran their $7 billion hedge fund, global hedge fund, massive experience, knows how to build portfolios that can withstand the storm. I've known Thane. Thane ran money for me for probably 20 years. Award-winning asset manager, fantastic guy, great human being. He's probably the third most famous person in his family. His daughter Aubrey was a finalist in whatever it was, season 12 of American Idol. Kind of a fun little fact. Erik's nickname, we mountain bike together. His nickname is Hold My Beer. He may be brilliant, but the dude does not know his limitations when it comes to mountain biking. Collectively, they run about $4 billion and run very conservative, very thoughtful portfolios. Their performance is fabulous. One of Erik's wealth plan portfolios, not portfolios, but strategies was #1 in class. It was down 3.9% last year. I mean, we're just proud to be affiliated with these guys. And so we pulled together a team that you can be proud of, that you can walk out, your clients will be pleased with the performance. And with that, I'm going to turn it over to Thane and Erik to talk about our asset management process.
Thank you very much, Ron. Great to join you, Keith and Ron and Thane today. It's a pleasure to be here. Just on behalf of the Wealth Plan Group, for whom I serve as CIO, it's a pleasure to be here and to talk about the way Thane and I have come together to build portfolios.
Yeah, I echo that, knowing these guys a long time. CWC was founded 20 plus years ago as an institutional portfolio manager. We've been vetted our process and philosophy by all the biggest consulting firms around the world. And I remember one time 20 years ago when I stepped up to present to Frank Russell Company in Tacoma. I was met by a strapping young analyst by the name of Erik Ogard. And so he saw us early on, and he knows what we do inside and out. I like the way Erik looks at the business. I like the way he handles himself. And when Ron suggested that I may be able to manage portfolios alongside Erik and have us work together, I jumped at the chance. I'm super excited. And I think the real winners are going to be the clients of the advisors we're talking to today, because they're going to get great portfolios.
Yeah, and all I'll say is, as the CIO for Wealth Plan, you guys have heard that I have a Russell background, which is true. I've been working for Wealth Plan as CIO for a couple of years now. The firm was founded, its predecessor firm anyway, by Todd Feltz, and it's grown into Wealth Plan, and Wealth Plan Investment Management is the registered entity that will be sub-advising these portfolios. So really happy to be part of this. So every good investment strategy has a philosophy, is backed by a philosophy. And Thane and I have, over the course of many months, been discussing, what are those philosophical underpinnings for the way that we run money. And before you, we have a list of those things. We're going to talk about them a little bit today to give you an appreciation for the kinds of things we're thinking about. Obviously, broad representation of asset classes is something that should be a part of a well-established investment program, and we certainly have that inside of these portfolios.
We do. If you look back to 2022, which Ron mentioned already once today, when you're coming off of a zero interest rate environment for a long period of time, and it's clear that interest rates are going to rise, bonds aren't going to perform very well. And stocks probably aren't going to perform very well either. So that third asset class, that alternative piece, was a place where we spent a lot of time and energy for 2022. And I know Erik has a great background in alternatives, and being able to recognize risk, control risk. I mean, we don't completely avoid risk, because you don't have excess return without taking some form of risk, but knowing the risk you take and making it prudent is how you really tend to have a portfolio that can outperform.
Yeah, that's right. And we think about outcomes when we think about building portfolios. So some folks might say, well, we think of stocks and bonds, and our approach is maybe slightly different in that we're thinking about, what does a client want and need? What does your investor want? Well, some want capital appreciation. So we get that through stocks primarily, but we can find capital appreciation in the markets broadly. And that's one of the things we're after when we invest in stocks. When we seek income, we either get that through bonds or high dividend yielding stocks. So we're not just thinking about bond for bond's sakes, but we know investors want income. And then lastly, we think about that absolute return piece. And this is the part that oftentimes gets missed in, say, traditional stock bond portfolios, that you can create some portfolio ballast through an appropriately designed daily liquid alternative strategy, where even if bonds and stocks have a tough year like they did last year, you get a little something from that other allocation.
And I think that the asset allocation is probably the most important thing that's going to determine how the portfolios do. We spend a lot of our time on individual stock selection at CWC, but your asset allocation is going to go a long way in determining your overall success.
And so we have this view that you want to get the risk right. And it's not so much being risk averse. That's not a virtue in our world, but being risk aware is. So you want to get the risks that are appropriate for the client, and you want to have portfolios that are aligned with the risk. So we've moved toward Riskalyze, which has just gone under a rebranding. But the basic idea is, we want to take the subjectivity out of risk. Like if you say you're an aggressive investor, what does that mean, aggressive? Well, if we can convert whatever you are to a number, there's no debating what a 58 is, right? So if we see a risk number that's a 58, we can map that to our underlying portfolios. So we've created this framework to do this, and it creates wonderful alignment between the end client and the portfolios we're managing.
Ron talked about creating scale in your business, how to maximize your value. This is a way where you can maximize the scale of your business. Is when the SEC comes in, you have to know your client. And I'm sure you guys all know your clients well, but you also have to document that you know your client and you're providing the portfolio that is most appropriate for that client. So this process with using Riskalyze, we can align the client score with the portfolio score, and it's a great paper trail when the SEC comes in to audit you, that you can show that you know your client, you're documenting it, and you're doing the right thing.
Thane, you had some interesting things to say about the process of getting a risk score for a client and the trade-off between potential return and risk. And maybe you can just share that one observation you shared with me.
Yeah, the Riskalyze questionnaire is different than most. And you'll have clients a lot of time that say, I don't want to lose money. I don't want to take risk. I don't want to lose money. But in the risk life score, if the risk is 1%, say, are you willing to risk 1% of your portfolio if your upside is 15%, 20%? Now, even someone who says, I don't want to lose money, they're probably going to say yes to that. So the Riskalyze process takes them through a series of questions that even if someone says, I don't want to lose any money, but at some point, if your upside is big enough, yeah, you may take a small loss. You're going to end up with a low risk score for someone who's more conservative, but it really gets to the heart of what someone's willing to risk in order to achieve a higher return.
So we've taken care to design and construct model portfolios that are representative of all of these types of outcomes we're seeking. We have put together what we call 8 building block portfolios. Those are the underlying inputs. So it just so happens that Thane and CWC manage 4 of those, and Wealth Plan Group manages 4 of those.
I think these 8 building block portfolios are actual GIPS verified composites of actual portfolios that we've been investing for anywhere between 4 and 20 years. So those are really solid blocks that we know and are comfortable taking anywhere to institutions, individuals all over the country. And we've blended these. Erik and I have gone through, and our teams have gone through an exhaustive process to blend these 8 blocks into 7 different model portfolios that will serve the different risk needs of clients that come into this program.
And then, obviously, because of the risk platform that we're using, each of these model portfolios has its own risk number, and the matching becomes very easy. And it becomes very defensible when you're interfacing with clients and introducing new clients to the investments that we manage. And ultimately, then you're handing it over to us to research, build, rebalance, monitor, and trade all of the underlying investments, which we and our staffs do every day.
One thing I'll point out on these 7 model portfolios, the building blocks are GIPS verified track records. Because we just melded these portfolios together. If you say, well, what's the performance of model number 3 for the last 5 years? We can show you what the back test is, but those numbers are not GIPS compliant. Those are hypothetical numbers that have been built with real numbers. But I want to make it clear that the performance of the models is hypothetical.
Right. So there's actual dollars and actual performance track records of the underlying building blocks, but putting them together in the way that we have ends up being hypothetical because they've never been combined with each other in the past. Okay, next slide.
Actually, before we move on, Clifton did have a question. What is a GIPS? And you guys want to just define that, and then we'll, I thought it was appropriate for answering instead of the Q&A.
You bet. So GIPS stands for Global Industry Presentation Standards. And it means that if I have 20 small cap accounts and small cap value that I run, and someone says, how did you do last year? I can't pick the best account and say this number. A GIPS compliance says I have to have a composite. So I have to take every small cap account that I manage and do a weighted average return for whatever time period we're looking at. So when I report performance, I report the average of every account that I manage under that scenario. If you are not GIPS compliant, you cannot be an institutional portfolio manager. If I go to CalPERS and say, hey, I want to run some money for you, but I'm not GIPS compliant, you can't get in the door.
Yeah, and I think the key there is when you claim GIPS compliant, you can claim it or you can be audited. And our firm is completely audited on our GIPS numbers, and I think Thane's is as well. So here's how this comes together. Sorry for providing so much text and not a lot of sizzle here, but this is the complete suite of the model portfolios from highest risk at the top to lowest risk at the bottom. It shows the allocations to equities, to fixed income, and alternatives. And you can see the risk scores on the left-hand side.
This is kind of the answer page. There's a staggering amount of data beneath that rolls up to get to these numbers. And this was not meant to be an investment management presentation, but to kind of give you an idea of how we put things together.
Yeah, what I would say is we look forward to having the opportunity to go into investment details with all of those of you who are interested. We're glad to have those conversations. You know, we won't take you through the 2-hour review unless you really want that, but Thane and I are both prepared to go to great depth to introduce you to the investment teams if necessary and kind of walk you through all the details to get you comfortable.
Great. And Jim did have a question. Is this all indexed?
No, this is active investment management. Thane, do you want to talk a little bit about your version of active, and I'll talk a little bit about ours?
You bet. So two of the portfolios that CWC brings to the table, one is a large cap domestic equity, one is a small cap domestic equity. We are selecting 30 to 40 individual equities in each of those portfolios. We have a value tilt to how we look at things. We realize that growth is what makes stocks go up, but it matters very much what you pay for those stocks. So those are fully active portfolios. CWC's International is a portfolio of ETFs. They are active ETFs for the most part. We're not opposed to passive in that frame, but we look very much at what we pay, looking for risk-adjusted after-tax returns. On the fixed income side, we'll use ETFs and maybe some mutual funds from time to time, and then some individual bonds as well. So, but we do take duration bets in the bond market. We've been very short and high quality for several years now, and that served us really well in 2022.
And on the wealth plan side, we have two direct stock portfolios. One we call our Dividend Aristocrats portfolio. So that is what we'll reference as a conservative portfolio on the equity side. It's a dividend growth strategy as opposed to just a high yield strategy. So we're looking for companies that have a 25-year track record of growing and raising their dividend, which has been a really excellent way in the last couple of years in particular of managing equity exposure. We also, and that's a 25 stock portfolio. We also run a 25 stock growth oriented portfolio that we call Select Equity. It sort of lands somewhere between the S&P and the NASDAQ. So when you think about growth, we do have exposure to some of those things you might think about: Google, Amazon, Microsoft, Apple. So we're not afraid of the higher PE stocks that deliver growth to portfolios, and we know they're important. So we have a little exposure to both growth and dividend oriented stocks, and it's a really nice mix. And then of course with Thane's value portfolio, we bring those together. So it's fully active, large cap growth investing. We have a team of analysts behind us that are CFAs and really sharp, good guys. I should also mention that we run the alternatives piece at Wealth Plan, and that's daily liquid mutual funds and ETFs that are absolute return oriented. And based on my experience running such portfolios when I was at Russell, you know, we understand the importance of liquidity, especially to retail investors, and we don't want to get caught up in any of that stuff that can, you know, represent a liquidity hangup. So everything we do is daily price, daily NAV, daily liquid, yet it's alternative. So we found managers that we feel very good about that can provide those absolute returns and be a differentiator and a ballast to the portfolio if things get difficult in the capital markets.
So this is kind of a layout of all the things that are being provided through the direct stock portfolios, the ETF and mutual fund research and stock selection and portfolio manager selection, alternative investments, all the holding and monitoring that's done that we do already that is now transferred over to E2P. We'll do portfolio implementation, trading, rebalancing. We don't make investment decisions based on taxes, but boy, we sure are aware of what they are. And I should probably also point out both Wealth Plan and CWC are not traders. They're long-term holders. And I can't remember the last time we took a short-term capital gain. It's been years and have to be a very unique experience for us to do that. We have availability of retirement plan solutions. Compliance will be much, I don't know what your compliance is, but this is a very straightforward compliance system that makes it very easy to show how you are complying with Reg BI and knowing your client for the SEC terminology. The asset management platform fee, everything we do, including the coaching that Ron does, the entire platform is a 64 basis point charge. That's an asset management fee charged to the client.
So the only caveat there is to the extent that there are ETFs or mutual funds with fees inside, those would be in addition to. So this fee represents the active stock selection that we're doing, plus all of the manager selection, the portfolio construction, and rebalancing.
Great. Thank you so much for that presentation, you guys. And moving in, I'd love to kick it back over to Ron to really talk about, the partnership with Chalice, and then we'll bring Keith on to give you guys an introduction.
Yeah, I'm really excited about Chalice. I was on the original board of Chalice, had an inside view of just the size and scope of this firm that Keith created. And on a $50 million book of business, if you utilize all of Chalice's services and discounts, it's somewhere around it $18,000 to $22,000 savings. And we're so excited about it. We think, for us, we want to create value for you guys, and improving the EBITDA helps valuation. And so we feel like if we can, we're going to spend our money, we're going to pay for you to have the premier membership in Chalice. So it's complimentary. But if you utilize Chalice's services and benefits, you're going to improve your bottom line, which from a self-centered point of view helps my bottom line, because I want to make you guys as valuable as possible at exit. And so this is, one more of the critical components of what we're doing is we're going to try to help you save money, become more efficient in operating your business. And I'm going to invite Keith to talk a little bit about Chalice. But once again, we're paying for your membership, and we're glad to do that.
Thanks, Ron. Look, this is really, really exciting what they're doing. E2P, like Chalice, we share the same value of independence, and we value your independence. And that's when Ron and his team, came to me and said, "Hey, we'd like to partner with you guys. We think we have a strategy that's going to help our advisors dramatically enhance the value of their book of business." And I said, "Well, tell me about it." And he did. And one of the things that I quickly realized that, I have no doubt in my mind, because I saw it firsthand, knowing Ron as long as I have, he's going to help you guys increase your earnings in a big way. It's going to help you get larger wallet share. So there's three key ingredients enhancing the enterprise value, right? One or two key. One, increased earnings, and two, decreased expenses. And any of you that know anything about Chalice, not only do we have over 60,000 members all over the country of all makes and sizes. If you go back real quick, one slide, Whitney, please. And these are folks that are financial advisors, RIAs, insurance agents, and CPAs. We have a lot of attorneys, mortgage brokers, realtors that have all come to Chalice to gain the economies of scale that they can't get on their own, to get some operational efficiencies, because we have over 60 products and services that take care of the entire life cycle of your business, from starting it, running it, growing it, protecting it, and monetizing it, Those resources all exist within the Chalice Network today. Average savings is 15 to 20% on average. As Ron mentioned, we actually have a resource calculator, savings calculator on our website. If you answer a couple, 5 or 6 questions, the outcome will tell you what your annual savings would be as a member of the Chalice Network. You know, there are over 10,000 referrals that we've made out to many of our members of the network itself. And today, all of our clients, the folks like you all, and probably many of you all that are members of the Chalice Network, represent over $3 trillion in client assets. And the combined revenue from our network is over $32 billion. So what this does is gives Whitney great leverage when she goes out and captures Fortune 500 benefits on your behalf. She's able to get them at discounted pricing and pass along savings to you. So that's just a really super easy way for us to help aggregate and integrate and make these type of products and services available. One, our mission is to make your life easier as an independent financial professional. We're going to save you time. As you know, many of you have got 4, 5, 6, 7 different disparate systems you have to go to run your business, whether it be QuickBooks, whether it's over Redtail for CRM, whether it's NRS for compliance, whatever those are. If you're getting it through the Chalice platform and part of the Chalice Network, whatever you're using, if they're API connected to our platform, guess what? It's going to show up on your dashboard. You have to remember one password to access all those products and services, as opposed to remembering 3 or 4 or 5 different passwords. The average savings, as Ron referenced, is about $18,000 annually. And these are basic day-to-day things that you need and use on a regular basis to even support your HR, IT, payroll, benefits. We're the only organization of its kind in the country today where independent advisors can get access to group health insurance. That's right, independent 1099 advisors or independent RA firms can get access to our group health insurance through our partnership we have with Oasis, which is a Paychex company. So whether it's accessing the benefits that support your insurance, marketing, lending, taxes, payroll, legal, you name it, we've got it. You'd be hard pressed to be able to see the things that you need in the day-to-day running of your business. Office Depot, I can't tell you how many times I get calls from advisors that say, hey, I'm affiliated with XYZ broker dealer, and I currently get a 30% discount on Office Depot through my broker dealer or my custodian. Well, we have a 55% discount with Office Depot. We have a 50% discount with UPS. So, these are things that you'd use on a day-to-day basis. If you just simply take advantage of some of these products and services that are on average 20 to 25% discounted, you're going to save a lot of money. And that drives up your EBITDA, as Ron referenced, which ultimately drives up your enterprise value. We got great partnerships. Whitney runs those partnerships. She's out there canvassing the marketplace all the time, trying to find the best and brightest partnerships like 1-800-Accountants, like Legal Shield, and going and bringing those in at discounted prices to all of our members. Every one of the members of the E2P network will have access to the Chalice platform, as Ron referenced, VIP membership, access to our group health insurance, access to all these discounts and savings. Cool thing is, guess what? If you wanted to make these same type of benefits available to you and your clients, we have also rolled out what's called Chalice Client Connect. We have many of our members over the years who come to us and said, hey, Keith, Whitney, I appreciate, the savings I get for me and my family for the health insurance. I appreciate the benefits that I get for me and my business. Any chance I can extend these same kind of benefits to my clients? They're small business owners just like me. And Whitney and I said, sure. If they join through Trinity Wealth Management in that example, then they can sign up as a member of the Trinity Wealth Management company that will white label a platform for you, and you can pass them. Today we have soybean farmers getting their health insurance from us. We've got John Deere franchises getting their health insurance from us. We've got people that own dry cleaners. We got mortgage brokers. We have all sorts of folks. So if you're interested in creating your own white labeled Chalice Client Connect for your business, give us a shout. Let Whitney know, or me know, or Ron know, and we'll make sure we can extend those kind of benefits to you as well. And so you can make this available to what a great differentiator, man. If you're taking care of your clients' health benefits for them because they're realtors or they're a mortgage broker or they're a small business owner and they're getting their health insurance from you, they're not worried about this so much, did you beat the S&P 500 by 200 basis points if they're getting those benefits from you. It's not about performance, it's about the value you add to them.
Thanks so much, Keith. And just to close that out, I know that the number one question that we get, beyond what's in your marketplace or what's accessible to me is, how do I know that I'm going to refer somebody over and they're going to have a good experience? So the most important thing when we set out to build this marketplace and these resources for not only financial professionals, but small businesses is we vet each one of these partners that we bring into our marketplace. We put them on a period where we're evaluating each, lead and activity that comes over to them to make sure that it is a positive experience for each one of those, that they are, providing those discounts that we've contracted with them, that they are, leaving a positive review after that, and that they are converting into something where they saved money or time, or, it was valuable to them. So we kind of joke around, we say, don't waste time Googling the best, we did it for you. So we've heard so many times, oh, I went with this marketing company and I got burnt, or I'm using, someone local and it's just not working out how I thought it would, which, we always encourage using local resources and tapping into your community. But sometimes you just need more, or you need a trusted solution. And we've been able to negotiate rates and strict service level agreements to where you get a white glove service and treatment with each one of these. So I encourage all of you to go and check it out. And then we'll send a follow-up after this with more information from E2P and more information for Chalice, so you guys can get in there and check everything out and take the next step.
Great. Before we turn it back over to Ron to close it out, one of the key things that what got me excited when Ron asked about partnering with us was, I said, look, my clients, that's every one of you on this call, are fiercely independent. And I said, as long as their independence is kept intact, I'm glad to support it, because I don't want to compete with anybody. I want to partner with everybody. And so I think what they're doing is absolutely brilliant, that you don't have any change in control. You don't have to change your affiliation. You don't have to change your clearing or custodian. You have your complete independence. They're offering themselves as a service provider, like some of the other service providers that we have on our platform. So with that, Ron, I'm going to turn it over to you to close out and share the E2P promise that if these folks take you up on your offer.
Yep, our promise to you is to increase your earnings, increase expenses, enhance your enterprise value. And I'm really passionate about this. I know right now that if you've got 50 million or 25 million, you probably only have half of your clients' wallet share. And just from your existing clients, we can add substantial assets to your book of business. And it's critical to do that right now, as you're getting ready to exit. In conclusion, just a story. When I was in 5th grade, my dad was a racer and ski instructor, and we were skiing up at Crystal Mountain, going through this huge mobile field. And my dad was really, still is. He's 92 years old, my hero. And he just goes booking through the steep section of big moguls, and I'm going through it scared to death. And we get to the bottom. I go, Dad, how do you do that? And he looked at me with a grin on his face, and he says, Ron, you got to feel the front of your ski boots, and you got to keep your hands up where you can see them, keep them in your point of view as you're going through these, steep, challenging moguls. And I said to him, I go, Dad, that just does not feel right. And my dad, with a grin on his face and a twinkle in his eye, looked at me and he says, why do you think there's so many intermediate skiers? And the purpose of this story is sometimes what feels right isn't right. And sometimes we have to enter that position, into that space that doesn't feel comfortable, but it will change your life.
You bet. Hey, look, we owe it to our audience. We have a series of questions that they have for you and your team. And Whitney, if you wouldn't mind, why don't we go ahead and rattle off some of the questions and let the guys answer it in the remaining time that we've got left.
Absolutely. So I know Clifton had a couple questions, so I've asked him to unmute to come on and ask a couple questions and open it up for Q&A, and then I'll bring on Robert as well. So
Yes, I
Clifton,
just,
thank you.
yes, this is Clifton. Just want to know, are members 1099s or are they W-2s? You might have answered that question already.
Well, but Ron, you may probably want to take it, but most of it will be, 1099 independent contract, because you're not going to work for E2P or not looking to become an employee of the firm. But, there will be several participants that may very well be W-2 employees within an RIA, because as we all know, RIAs are actual firms, as well as some 1099 independent contractors have their own firm, but yet are affiliated with a BDRA. So most of them will be 1099 independent contractor type folks.
Okay, thank you.
Welcome, thank you.
Clifton, I did see a question earlier that asked what the typical timeline from bundle to put on the market and what support is provided to help grow the business. And I know that was touched on a little bit in some of the slides, but Ron or Erik or Thane, maybe you'd like to respond. What is the typical timeline from bundle to put on the market?
About 18 months. If we have guides, we've actually had a situation where one of our clients, he's actually 67 and has had health issues, and he's having so much fun. He's so re-energized. He's gone from wanting to exit right away. He goes, I might do this for 3 or 4 more years. He's having tremendous success. So the way we work is, we put you into bundles based on your timeline of when you want to exit. And so, we might have a group of 50 or 55-year-olds that, want to work for another 10 years or whatever it might be, and a group that are 65. We structure, we group them together with their common goals of when they want to exit.
Not unlike a private equity fund, right, Ron? So you might have
Right.
vintage 1, vintage 2, vintage 3, and based upon the maturity of that group.
Yeah.
Thank you, Ron. And Robert Hoyt, I've requested.
Can I just interject real quick here? This is Erik. It occurs to me that somebody that's wondering, is this a W-2 or a 1099 situation? Thane over at CWC does have the ability to bring folks, with the appropriate conversations and understandings. He has a full functioning RIA where he could bring folks over that may want to have some different form of transition, but still be involved with us. I wanted to get that point out there.
I think Wealth Plan has a summer program as well.
Correct. Yeah, that's true.
Yeah, we're agnostic. We're here to serve it in any way we can. And the majority of our clients, we just simply have trading authority on their client accounts, and they stay right where they are. But in the event that you wanted to move, we can certainly help facilitate that.
Great. And I've brought, is it Jeffrey or Joffrey?
It's Jeffrey. Yes.
Okay. Thank you for joining in the Q&A. I know you had a question. How do you help advisors grow the business?
Ron?
Yeah, Jeffrey, thanks for the question. We have a mentoring program and an educational program that really starts with building a custom pitch book for you that features you personally and your firm, and then walk you through how to communicate the principles that you really have to create confidence in the potential client or existing client, that you're going to have third-party institutional management. Just without getting into the whole seminar, one of the things that we do is we have a program to help you get leads from CPAs, and we have a very specific program that gives the CPA the confidence that they can refer a client to you. CPA's clients are their asset, and they can't afford to turn them over to make a referral and then have you make a big mistake. So we have a very specific program to facilitate that. Not to mention, we know that your existing book of business, you don't have the full wallet share, and I have a strategy to help you go get the rest of their assets.
Great. Thank you so much, Ron. And I did have another question earlier, and I had asked Robert to unmute, but he didn't jump in. So one of the questions was, what about RIAs with a lot of private fund alts?
Yeah, we've looked at guys with a fair amount of annuities. Actually, in the last few years, with interest rates as horrible as they've been, and the amount of risk associated with fixed income, they started utilizing annuities as a proxy for income, for fixed income. And we have a workaround strategy where, because those are typically illiquid assets, I imagine you might be talking about REITs and stuff. We're really interested in your, well, maybe I should digress. All of those assets that are commissioned assets, they're typically pretty expensive for your clients, and maybe not the best place for them to be. If we can migrate those assets into managed assets, at the end of the day, you're likely going to improve the situation for your clients, and you're definitely going to improve the situation for yourself. Those commission-based products typically are worth very little at exit, somewhere between 0.3 and 0.5 times revenue. So I mean, it's not very attractive, as opposed to if you can convert those assets into managed assets, now you're looking at a multiple of, 4 or 5 times. So
well, excuse, this is Robert Hoyt. Let me clarify. It's not about commissioned assets. It's traditional private fund alternatives that I notice you use more liquid alts. I'm talking about illiquid alts. What about if the RIA has a substantial portion of those?
Like private equity or private credit, that sort of thing, right?
you want to jump
Well,
on
we
that?
have the universe of private is actually quite large, but there's hedged equity, there's venture, there's a whole universe.
Yeah.
Yep.
Yeah.
So this is Erik. I mean, I've lived through a series of ups and downs in the illiquid space, and I know where all the bodies are buried and all the unpleasant experiences are. And that's not to say all illiquid alternatives are bad, but there is a substantial trade-off between liquidity and illiquidity. And so we've chosen as a team here to focus on liquid assets for alternatives. And that, that's not a completely easy task, because you're looking for low correlation, absolute return strategies that have that underlying liquidity. If the advisor is just determined to keep the illiquids and to keep their clients in the illiquids, and we sort of get, right, there's some of it can be very illiquid with like a 5-year window on it for even getting out. You just have to wait for things to mature. So our view is, if you want to keep those, we allow you to keep those, and we put you in the other assets and try to blend it with those things that you can't sell, recognizing on exit, that might create a multiple problem, depending on what can be acquired by an acquirer.
Yeah, I would think there's not much of an appetite to be purchasing, private equity on the secondary market.
Okay. All right. Thank you.
There's a little bit of a larger question there as well. And sometimes we may inherit a book that has a large embedded capital gain. I do want to let people know that we are ready and willing to work with you over a period of time to make the transition to these new portfolios. We're not going to say, you have to sell everything in 2 weeks if that is the wrong thing for the client. And the bottom line is, we want whatever's best for the client. And if you want to work out of those illiquid alts, we'll work with you over time. It's going to be a process, and you do have to be willing to do that. If the choice is to keep it and not eventually move it to our platform, it's probably not the best fit for us.
Okay, got it. Thanks. I need to go, gentlemen.
Thank you, Robert.
Bye.
All right. Well, thank you so much, everybody, and for your time and participation today. We'll make sure to share all of the contact information for the teams here and what you can take advantage of with E2P and Chalice. I really appreciate it. We'll also be sharing the recording if you'd like to circulate it. But we encourage each one of you to, reach out, ask any questions or follow-ups. We'd be happy to get you connected with anyone on this call for further discussions on, how to move forward or what might be best for your firm. Any last words from, the team that's on with us today?
Thank you, everybody.
Thank you.
Thank you. We're very grateful for your time.
Thank you.
Thank you. Have a good day.